Hello everyone, I am Saurabh Pandey and today we are going to talk about a topic that's becoming one of the biggest wealth trends of our time. How Indians living in the United States are moving their investments and wealth to Dubai. So let's explore. Now before I say anything, let me make this crystal clear. This video is purely for educational purposes. I am not a tax advisor, I am not a financial planner, and I am not giving legal or tax advice. Everything I will share is based on official information available from the US, Internal Revenue Services, and the UAE government as of today, along with my professional experience helping global investors structure their Dubai portfolio safely. I have seen many people online casually saying move your money to Dubai tax-free or buy property in Dubai and skip taxes. That's dangerous advice because yes, Dubai doesn't tax you. But if you live in the US, you still have responsibility under US law. So today we will go through what is actually true, what depends on your case, and how you can build a clean, legal, and global investment path. Let's begin with the simple question: why Dubai? Dubai has become one of the top destinations for global wealth, and that's not marketing, it's math. There is no personal income tax, no capital gains tax, and no inheritance tax for individuals in Dubai. That's officially confirmed by the UAE Ministry of Finance and PwC Global Tax Summaries. The UAE dirham, which is also known as Emirati dirham, is pegged to the US dollar, which means your currency doesn't fluctuate like other emerging markets. You can buy freehold property, rent it out, sell it, and hold 100% ownership as a foreigner in designated areas. That's also officially permitted by Dubai Land Department regulations. For Indian Americans, this is appealing because you already earn in dollars and Dubai runs on the same dollar peg. So when you move wealth to Dubai, you are not converting into a volatile currency, you are staying in a dollar-linked system. And while the US market is mature and saturated, Dubai still offers faster appreciation and higher rental yields, often between 5 to 8% net, according to Dubai Land Department transaction data. Now let's talk about the process. How do you move your money from the US to Dubai legally? If you are living in the US, whether on a green card, H1B, L1, or as a citizen, your funds are already under the US system. You can legally transfer your own post-tax money abroad for investments. You don't need special approval from the US government to send money to the UAE. It's allowed under the US Treasury's general rules. When you wire funds from your US bank, your bank may ask you for the beneficiary details, IBAN number, SWIFT code, and the purpose of transfer. Always mention the real reason: property investment, personal investment, or savings transfer. That's all the compliance you need for a personal investment. Just make sure that the money comes from an account in your name. You can show proof that it's post-tax income and you have the sale agreement or property booking document as you trade. If you follow that, your money transfer is fully legal and compliant. It's simply your capital moving abroad for investment, not income being hidden offshore. If part of your capital is still in India, maybe savings, fixed deposits, or property sale proceeds, then you must follow the liberalized remittance scheme under RBI guidelines. This allows any Indian resident to send up to USD 250,000 per financial year abroad for investments. That includes real estate, education, or stocks. Families can combine their limit legally. For example, a family of 4 can remit USD 1 million together in a single year. This system is completely legal and transparent. The RBI itself clarifies that property acquisition abroad is allowed under LRC. The only key condition: money must be declared, transferred through official banking channels, and used for legitimate purposes. No cash, no informal transfers. Once you are ready to invest, you will need a UAE bank account. Banks like Emirates NBD, Mashreq, First Abu Dhabi Bank, and RAK Bank allows non-residents to open accounts provided you pass Know Your Customer and FATCA verification. You will need a valid passport, then a US address proof, also US tax identification like SSN, ITIN, and 3 to 6 months of US bank statements, whether it can be your personal or companies. Once your account is open and you can fund it directly from your US account, if you later get a golden visa, it upgrades to a resident account with full privileges. These banks are FATCA registered, which means they automatically share required account information with US authorities when thresholds are met. That's important to say because you are not hiding money, you are investing it transparently. Now let's talk about what is absolutely clear under US tax law. If you are a US citizen, green card holder, or resident for tax purposes, the IRS taxes you on worldwide income. That includes your salary, dividends, rental income, and capital gains. Even from Dubai. This is a fact. It comes directly from the IRS, International Taxpayer, FAQ. If you rent out your Dubai property, that rental income must be reported on Schedule E of your US tax return. You can deduct legitimate expenses like service charges, management fees, property insurance, maintenance, and mortgage interest. You can also depreciate the property over 27.5 years, which often reduces your taxable rental income dramatically. If you sell your Dubai property, any profit is a capital gain and you report it under US rules. The rate depends on how long you held the property. Dubai doesn't tax your gains, so there's no double taxation. You just pay what the US requires. That's straightforward and legal. If you have any foreign financial account, including a UAE bank account, and the aggregate balance exceed $10,000 at any point during the year, you must file an FBAR FinCEN from 114. If your total foreign assets exceed FATCA threshold starting at $50,000 for single fillers, you must also file Form 8938 with your tax return. These are reporting obligations, not additional taxes. Their purpose is transparency, not punishment. As long as you disclose, you're fully within the law. Now, let's talk about what is not universal. These are areas that depend on your individual case. For example, how your US state treats foreign income varies. Some states like California or New York may apply state-level taxation on your worldwide income. Others like Texas or Florida don't have state income tax. Similarly, if you set up an entity in the UAE, like a company, trust, or foundation, the way it's treated under US law can differ dramatically. Some entities may be treated as controlled foreign corporation, which are also known as CFCs, or passive foreign investment companies, PFICs, which have complex tax rules. That's why it's essential to consult a US CPA who specializes in cross-border taxation. Another area that's case by case is residency test. If you are on a visa like H-1B or L-1, your tax residency is determined by the substantial present test, not your visa itself. So don't assume you are non-resident just because you are on a temporary visa. In summary, what's always safe to say is the US tax is global income, but how much and how you file depends on your personal situation. Now the UAE Golden Visa. This part I can say with confidence is factual and publicly confirmed by the UAE government. If you own real estate worth 82 million or more, around USD 545,000, you qualify for a 10-year renewable UAE Golden Visa. You can combine multiple properties to meet that threshold, and mortgages are allowed as long as your equity exceeds 82 million. The Golden Visa lets you live, work, and study in UAE, sponsor your spouse and children, and enjoy resident privileges. You don't need to stay full-time. Visiting every 6 months keeps it valid. That's one of the cleanest and most investor-friendly residency programs in the world. Another thing I can confirm confidently in the UAE, if a non-Muslim passes away without a registered will, Sharia law applies by default to asset distribution. That's why most foreign investors register a DIFC will. It is recognized by the Dubai court and allows you to distribute your property as per your own country's inheritance law. For larger portfolios, you can also establish an ADGM or DIFC foundation. This is 100% legal and widely used by international families for asset protection and inheritance planning. However, how a foundation or trust is treated for US tax purposes varies. So again, always get professional advice before you form one. For most Indian Americans, the best route is personal ownership for 1 or 2 properties. Using your own post-tax money, start with clear documentation, wire receipts, sale agreement, title deed, and annual rent statements. Keep them all organized. They will make your US filings simple. If you plan to scale to multiple assets, talk to your CPA about whether an LLC or SPV makes sense. Avoid setting up offshore companies or complicated multi-layered structures unless absolutely necessary. Transparency is your best protection. From a real estate point of view, Dubai's market has shown remarkable stability and growth. Prime zones like downtown Palm Jumeirah, Dubai Creek Harbour, and Jumeirah Village Circle have seen annual appreciation between 6 and 12%. Over the last 5 years, according to Dubai Land Department data, average net rental yield ranged from 5 to 8% compared to 3 to 4% after tax in the US. And because there is no personal income or capital gain tax, your gross yield in Dubai often equals your net yield. That's what makes it attractive. Simple math, clean system, real ownership. So let me summarize what I am 100% sure of and what you can safely understand. The US government taxes worldwide income for citizens and residents. Rental income and capital gains from Dubai must be reported in the US, but expenses and depreciation are deductible. FBAR and FATCA reporting is required for foreign accounts above threshold. The UAE has no personal income or capital gains tax for individuals. Foreigners can legally own property in Dubai in designated freehold areas. The UAE Golden Visa requires AED 2 million of property ownership. DIFC will protect inheritance for non-Muslims. And what depends on the person, how US state tax apply, how LLCs, SPVs or foundations are treated under US tax law, whether you qualify as a US tax resident, what treaties or deduction may apply. Always remind your viewers, before investing, consult a US CPA or tax attorney familiar with cross-border real estate and a UAE lawyer for local compliance. So that's the clear factual and legal picture of how Indians living in the US can move their wealth to Dubai safely, legally and confidently. Dubai gives you freedom. The US gives you structure. When you understand both, you can build a future that's global, compliant and smart. If you want guidance on how to choose the right Dubai property, structure your ownership, or understand the investment side clearly, you can reach out to me directly. My WhatsApp number and my Instagram handle is given on the screen. So till next video, signing off.